Trading Market Technicals morning call video for Friday, March the 22nd. Well, we did get another follow-through day to the downside. We did get a little bit of movement. Dow really took the grunt of it. Dow down 90, S&P down 12. Gold managed to eke out a nice little day up 7. NASDAQ down 31. And the dollar actually really just relatively paused. We had an inside day. Yesterday's price action was very, very choppy, headline driven, and right now it seems like they're fixated on what's going on with the Cyprus and what the potential impact could be, obviously for the euro itself. I think in the grand scheme of things, it really doesn't matter with Cyprus being so small, but really it's their policies on the other countries and their banks and what their issue is, what it's going to be. So if you get the small guy taking a major haircut on their deposit, it doesn't really look good or feel well to any other countries in the eurozone. People getting afraid, saying, "Hey, wait a minute, because I have money at this bank, I'm going to get a 6% haircut or a 9.9% haircut, anything above 100,000 euros." So you could get that big run on a bank, and what they did was they issued a bank holiday basically for the week. So that run on the bank actually started on Saturday, and now obviously with the banks closed, they're trying to get some sort of a resolution here. So we do have some sort of at least a catalyst, some sort of a bad news that came out. Markets didn't do too much though. We did sell off, and like I said, when we sold off in the morning, it was rather quick and fast, and then markets kind of played around up and chopping up and down here. So one thing that price action that I saw, and I love looking at internals, what the breadth of the market is, and it doesn't have to be the advanced decline, so to speak, but it's what the other sectors are doing. As you know, I love to follow the 5 sectors that I like to follow. One, as you know, being the transportation sector. Now, the transports took a big hit, and that's because of FedEx 2 days ago. FedEx followed through nicely to the downside yesterday. Transportation sector is very, very weak. They have been the driver of this rally since December 31st when they announced the fiscal cliff resolution, at least temporarily. Now, and I've been mentioning to you about XLF, the bank and financial sector, very, very weak yesterday. Goldman Sachs, J.P. Morgan traded down near their recent lows, and if the bank continues to trade weak, and we break a new recent low, I think you could see a lot of follow-through with the S&P in itself, along with the help from the transportation sector. That's a recipe for lower prices ahead. But we'll take a look at that. I'm going to show that to you on the charts this morning, and I want to get right into it. Really don't have a lot today, but I do have some key important things wanted to go over with you. Now, here we have in front is the copper. And I look at copper every day. I know sometimes it might be a little bit boring, but I want to see what copper does. And if you look at the candle, you have this large topping tail. That actually is a true price action. When you have buyers trying to push this back up, what's happening? Sellers are coming right in this area, 347, 350, and just pushing it right back down again. That is not a good sign if you are a bull. So again, another indication that we are at lofty levels here with a lot of inflows from retail coming in at these levels in the S&P, and I'll get into that in a moment. That is not what you want to see, because you have a lot of longs that are going to be trapped if this market decides to sell off. Okay, now we have a couple of small down days, no big deal. We are still in a strong uptrend, but there are a lot of signs that we may be having a top in place, and or at least a tradable top. So this is not a good sign here if you're a bull. Look at the top and tail here. We did close positive, but barely, and that is not a good sign again. Right now, let's take a look at the S&P stocks above the 50-day move average. And I mentioned this to you, so we had some divergence here. Remember, 93.40, 85 making lower high from the 93.40, and what was happening several days ago, the S&P continued to make new highs. Divergence here. Now divergence seems to be panning out, and we are moving lower, 1545 in the S&P. So this stocks are not making new highs above the 50-day moving average anymore. They're starting to roll over. That's not a good sign. So that's another thing that I want you to be aware of. Okay, let's take a look at the dollar. Now the dollar is going to be key here, and I keep mentioning that to you. What it looks like is that, and I said, if the dollar starts to sell off a little bit, it's going to be good for gold stocks, commodity-related precious metals. But what's happening, it seems to be gold has paused, but yesterday gold took a nice turn to the upside. especially the GDX that we've been talking about, and I'm going to show that to you in a moment. So this is going to be a little tricky. I want to see how the dollar actually reacts to the relationship of any type of sell-off that we may have. We could get safe haven inflows here in the dollar and really start to rally this market. And then the gold actually rallies with the dollar because of safe haven flows. We don't know. But it does look like right now the dollar did pause. Dollars have had an inside week, basically, just pretty much all week in trading in this range at 82 to 83.30. So we'll continue to monitor what the dollar does, but no doubt about it, the transportation sector, the XLF, you need to really pay attention to that intraday and along with the VIX. Now let's talk about the VIX here real quick. The VIX did manage to push up a little bit. To really get going and really have fear in this market, VIX really has to break above this 1540 area, which is the 200-day moving average. I'd like to see the VIX start to chug along here, and then we can really get going to the upside. Not calling a top. We never call a top here, but if we start breaking some pivotal lows and make lower lows in price, then I would say we have a pivotal top here, at least some form of a tradable top that we can actually get short the market for a swing trade. Okay. Now, let me show you another, which I haven't shown this to you in a while because really nothing has changed. This is all of January, all of February. We did break down a little bit, and we're back up at these lofty levels. So price here on the composite is way up high. All right, and this is the Nasdaq record high percent index. And I mentioned this months ago that every time usually we come down 2 or 3 weeks later, we dip and we make a lower high. That would create that buy signal, if you can see here and here and here. And then we had a buy signal here, and the markets rally. Same thing here back in late November, which really put this market rally in place. And we never really dipped lower. If you saw that, we did get it a little bit here, but we never dipped lower, making that lower high. I mean, we did here, but not as deep as the other previous dips. So now this here is going to be what I'm going to be watching. If we can take this and see what happens if we start to dip lower here. Okay, keep an eye on certain indicators that you like to follow. It doesn't necessarily have to be mine, but indicators are starting to roll over here. Let me show you what the bullish scenario here is. This is the Shanghai. And Shanghai actually broke out of our ratio chart, right? Our SSC versus the S&P, relative strength to the SPX, and we have a bull flag, which we broke out 2 days ago, and we had follow through yesterday. So it's actually very odd, the price action, because if you look at the EEM and the FXI, which I'm going to show you right now, here's the China fund. China fund is actually really struggling here. It has a lot of weakness. So we have a little bit of a mixed bag out in the Asia rim. But if you look at the Shanghai, that's a good sign, a good positive. That could take the other the FXI with it. But right now, not showing much strength at all. If you look at the EEM, which is the emerging markets, which is a concern to me too as well, EEM just actually sold off again. So no strength at all. Strong downtrend. You can see here from our ratio chart. So big concern, big red flag here, okay? So now let's go into our charts. And I just want to show you the ATR, average true range. Right now, we're just kind of hugging in, back and forth, chopping around here for the last 3-4 days. Actually, for the last 6, 7, 8, 9 days. You can see up in this area. But our ratio chart has not moved yet, okay? And as you can see, as we move higher, the ATR goes lower. And as the ATR goes up, we have volatility, market comes lower. So we're going to see if this starts to pick up steam and can break above this 15 area right in here. That's what I'm going to be looking at in the coming days for next week. Here is our GDX chart. I mentioned we had a small inverted head and shoulders off of this bullish falling wedge or the channel, whatever you prefer. Usually when it comes out of it, it starts to make some sort of a inverted head and shoulders. Now, we did break out that 3820, which is that really key area. And we are outside that that upper end of resistance. So this is looking really, really good. Now, I'd like to see price move a little higher again and then make one more lower high. And then I would really get me better saying, hey, we have a little short-term tradable bottom here that we can get long the GDX for a trade. Right now, I'm only looking for day trades in the GDX, but definitely constructive. Take a look at the USO breaking down from this bear flag here, so not really looking too good for the moment anyway. So let's see if we can hold down this 32.14 here. But really no trade in the USO. I'm slightly bearish to neutral in USO at the moment, which is oil. Spiders. All right, now what I did was I adjusted the lines here, and I just made this large uptrend channel. And this is in a large tradable uptrend channel here. As you can see here, here, and here. So even if it broke the 20-day moving average, it would still be in an uptrend. Okay, so really keep that in mind, guys. If we do get some sort of a move lower, it would have to hang into this channel, which would coincide nicely with the 50-day moving average here in red. Now, if we break this channel, if we break it on a closing basis and backtest and then fail, then I think that I would probably be safe to say that we have a tradable top in place. Until then, it's just a little noise here. Market's reacting to what's going on with Cyprus. But again, looking okay, but we are still in this sideways consolidation above the 20-day. Do not fall in love with the downside. Not right this second. Let's wait and see what price tells us to do. Here's the 60-minute, as you can see here, and here's all. I have all of our support lines here, and we are just right now hanging above this support line, which is this gap area. See this gap area here? It eventually will get filled. Doesn't have to be today or tomorrow, but it will get filled. And as you can see here, the 200 period moving average, 153.32. We need to really start breaking down here. Again, we have to see price start to break down and make lower lows and lower highs. Our indicators on the 60-minute are clearly showing rollover, negative signs here. So we are matching what price is doing. So I do see further weakness in the coming days. Now, that could easily change with some sort of resolution. Remember, guys, this is news-driven. That's what we want. We want volatility. I want to see volatility, but I want to see good volatility, right? Right now, we haven't really gotten much volatility other than a couple of days, a couple of small days, but it's okay. Pick your spots, 2-3 trades, you get paid for the day. Here's the 30-minute S&P with the Bollinger Bands. As you can see here, we're still wide, so we're going to need to consolidate a little bit more. But here's my point. Look at what's happening here. We're inside this range. We gap up a little bit. We stay in the range for the rest of the day. We gap down. We rally up for 2-3 hours. We stay in the range. Gap down, same thing. So you really need to be selective with your trades. You just can't go out and plainly just short the market in itself because it's not working. Okay, take a look at the cash. Just want to show you this is where we are. We're still in this 1555 area and 1530. That's going to be our main pivotal support. We break the 20-day moving average. That'll get us entices a little bit more to get going to the downside. And even if I can even grab a channel here like this, and let me just get that a little higher here. So you can even take this channel line and a break below this line, right? It's the same thing as the spiders, right? You take this and you just kind of bring this up into a channel, and then I'll clean this up for Monday morning. But you can see here, guys, we are still in a channel. We are still in an uptrend channel. Means that we are still in an uptrend. So believe it or not, if we get a slow-moving pullback on light volume, that's going to be bullish and setting up for the next run on the highs here. Okay, just keep that in mind. All right. Now, these are interesting developments. Now, the IYT, which is the transportation ETF, very, very weak. I don't like to see this if you are a bull. But we are in this uptrend channel as well, and we actually touched the 20-day moving average and bounced off it. But I do see further weakness. If this starts to break lower and we start making lower lows along with the financials and along with the Russell, then I do think that we have a tradable top in place. Until then, price is just moving lower right now, and it actually was pretty slow going yesterday. But nonetheless, we did close lower, and this is a bad sign right now. Don't want to see this. We're still overbought. Our readings are still overbought in MACD and stochastics. Take a look at the XLF. Big rising wedge, bearish rising wedge. It's only bearish when we break the lower trend line. And you can see here that lower trend line coincides nicely with that 50-day moving average here in red. So I just wanted to move that just to show you. So we need to really break below this and back test it, and then we will get long financials. I mentioned earlier in the month, I said financials is going to be a great short, but it has not. Right now, it's only a couple of days, guys. I wouldn't go out and short the financials just yet. For a day trade, absolutely, but for now, as a swing trade, I'd back off just a little bit. Let's see where the financials take us, but JP Morgan, Goldman, clearly closing and trading near their lows, not a good sign. Here's the IWM, faring up a little bit well, better than the transports, but we're in this consolidation range here. We really need to break the 20-day moving average as well, break that lower, back test this uptrend channel, and then I think we have some longs. When we have our sectors in sync with one another, risk off And then we look at our currencies, and our currencies are high-yielding currencies such as the Aussie dollar, of course, even the euro, the New Zealand dollar, the Canadian dollar, and these correlated risk-on currencies, high-yielding currencies, are starting to move lower as well. And the currencies are telling us risk off. Then you have something really, you get a little bit more conviction that you can actually put a little bit more leverage on. Here's the diamonds here. As you can see, diamonds weak, on the down 92 yesterday. But again, still within this sideways consolidation pattern here and way above the 20-day moving average. So this needs a lot of more work to the downside to really get going here. Okay, and a couple more. Apple. As you can see, Apple actually fared really well yesterday within the with the market being down here. But this is not a bad. Apple's holding in pretty good. We need to really hold 440. If we break back below 440, I think it's going to test 400. So we'll just see here. Again, Apple to me is just a trading stock right now if you are looking to trade it intraday. Here, lastly, is the Qs, guys. And the Qs, tech really took a big hit because of Oracle. Cisco was weaker as well yesterday. So not looking too pretty. I do think one time after we get some sort of a decent sell-off, technology is going to be a great buy. So keep an eye on that. But for now, we could probably look to get short some technology stocks. And if this is a foreshadowing to come with Oracle and FedEx with their earnings missing top and bottom line, it could get really interesting this earnings season, which starts April, I believe, the 6th or the 8th when Alcoa reports. So just keep an eye on that. All right, guys, I want you to enjoy the weekend, get some rest. Hopefully next week or two, it's going to be very, very interesting. I'm going to have a large report come out on Monday with a little longer-term picture as well. Take care and enjoy the weekend.